From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, and welcome to the COB on this Wednesday afternoon. It is July the 3rd. I'm Nadine Blaney. So it has been a positive session. I think, as you will well know by now, if you're listening to us in podcast form, don't forget you can check out all the interviews that we do throughout the day on ausbiz.com.au throughout your evening. And we've done a lot on stock specifics throughout the day today. And that's perhaps where we'll start with our three themes, because today a lot of it was about the miners. We had iron ore rising yet again. Stimulus hopes in China. We did have that Chinese data that did weigh on the stock market there. And I'll be talking with my guest as well about the coal miners. Quite the week for the coal miners, still amongst the best performers. Sales boost, well, that of course relates to retail sales. So I had a really good conversation a short time ago. One of the interviews you can catch up with on ausbiz.com.au at your convenience with Brendan Rinn, who's the chief economist of KPMG. He's not fazed at all by this bump that we saw in retail sales. In terms of what it means for the RBA, what he says is that it is an indicator of consumers getting out there and looking for the best deal, so waiting to buy in those sales that came up toward the end of the financial year. And I think it's worthwhile listening to that interview for his take on the RBA minutes. He says, not talked about a lot, but very important, is the fact that the RBA is looking to get its inflation back to its target band between 2 and 3%, not this year, not next year, but 2026. So it's got time to be patient. He's pushing back against those who expect that there will be an interest rate hike coming later this year, one of which is Morgan Stanley. I read a really great note from Morgan Stanley this morning. Their counter arguments to those who say that there is no need for an interest rate hike. Maybe I'll ask my guest about that one as well. But let's get to the sectors of the day, those that outperformed, those that underperformed as well. And energy is one of those sectors, a little bit mixed if you look to beach at least, but was positive overall with 7 of the 11 sectors higher. I'm a bit surprised to see some of those big players not doing as well today. We have seen oil looking pretty good. Yesterday, Brent was trading around 2-week highs. Geopolitics, also that hurricane that has really done a lot of damage in North America. Pretty scary when we talk about coal. We talk about the fact that this is the earliest that there has ever been a tropical storm there in the Northern Hemisphere, and it was very damaging for some of those smaller nations in the Caribbean. Okay, so that's energy. Let's take a look at tech. Overall, tech was the best performing sector, so it was up by more than 1%. You can see why. Wise Tech, Zero looking good, NextDC as well, T&E, Technology One up by 1.3%. I did mention the miners. It was the miners that really gave a lot of life to this market overall. We're watching the price of iron ore continue to look pretty strong. Chinese stimulus, I guess, is part of the theory behind that. But also, if you look to some of the best performers, look no further than the uranium miners. Deep Yellow was up by close to 7%. Paladin was also higher. It was up by 6.38%. And then you've got Boss Energy up by 4% as well. Not on that screen, but just to give you a taste of what else is happening out there. And Whitehaven Coal up by 3.5%. Let's get a view on markets. And for that, Mark Gardner from MPC Markets joins me now. Hey, Mark.
Good afternoon.
Good afternoon. That was quite the preamble. What stuck out to you as an investor today?
Yeah, we had those uranium stocks pop back up. There was some pretty heavy selling into the end of the financial year in those guys. Despite the likes of Paladin probably being up quite a bit for the year. Obviously the coal stocks as well, that Anglo-American mine in Queensland that's had a methane explosion, and it's going to be offline for several months. So that's really started to push those coal miners higher. We had Yancoal hit a record high, I think, today as well. And Stanmore sort of jumped out of the doldrums back up towards, I think, $394 as well. So that energy sector overall has been fairly positive. Even the likes of Woodside, which has been in the doldrums for quite some time now, starting to peek its head up. It's slightly down, but we're starting to see a few analysts come out and say it's looking like some value here.
Yeah, some that I've been talking about. Do you agree that it's good value here?
Yeah, I do. It's just, it's one of those things that the trend leading into the end of financial year tends to stick, particularly in those last couple of weeks, and sort of rummaging around the bargain base, the bargain bin at the moment, and picking up a few of those unloved stocks that got sold off for end of year tax loss selling.
Your view on coal stocks? There's been, again, a lot of enthusiasm. It is that Anglo-American shutdown, obviously, but there was a rail collision, a few days prior. Then there's still a lot of coal demand. We talk a lot about renewables. We talk a lot about nuclear because it's, sexy. And it's, in the headlines in terms of politics and policy. But for now, the world is still burning a lot of coal.
Well, Asia in particular is burning a lot of coal. Yeah. So you've seen basically the imports in Asia just continually rising. Obviously, it's declining in first world countries as we try to push the renewables.
But offset by Asian countries and India.
Yeah, really. So I think the overall coal market is almost expanding a little bit. So we've got really good clean coal here in Australia. Metallurgical coal obviously is still going to be needed if we get any hope of this energy transition, because you need steel for windmills, you need steel for solar, you need steel to get all of this infrastructure up and running. So we always carry at least 5 to 10% in the coal sector, particularly the likes of Yancoal. Probably not at these prices, but I think it was about $1 lower just a week ago. It's yielding very close to double digits, fully franked. So it's still a good place to get dividends, and obviously, particularly in Australia, you can't really expand or open a new coal mine. So you don't have a glut of supply coming in, which is obviously where the sectors like lithium have run into problems, because I think there's some rather large mines coming out of South America over the next 18 months, which are pinning the underlying prices down. So you've really got, not everyone's rushing to open coal mines.
No, there's very, very little capital going into new coal.
And demand grinding higher. So, we currently have New Hope and Stanmore, and it's just a bit of an ebb and flow. It does seem to go out of favour and then come back into favour, and we're just getting that run at the moment. It's probably early stages. I think there's probably another 10-15% upside from here.
Okay. So let's talk about retail sales, up 0.6%, beat expectations, but this is still indicative trend terms of a consumer that's had it rough and interest rates still high. So is there anything in that retail sales data that you take away as an investor in terms of prospects?
I tend to agree with the fellow from KPMG you had on today, is that I think consumers are being very selective. When they go and spend, they'll go and spend at sale time, and they'll get what they need, and then we'll probably see more subdued. So those sale periods are becoming more and more pronounced in terms of volumes, and as the consumer gets a little bit more savvy, but obviously that strength does put extra pressure on the RBA, I guess, but I tend to be in the camp of we're probably to stay higher for longer and not have to move. It'd be very odd just to plonk another 25 basis points, out like in the middle of nowhere, out of context. So you're starting to see the likes of Powell, who was talking in Portugal overnight, saying that inflation's getting towards being under control, heading in the right direction. Lagarde, pretty aggressive in her predictions. But I don't think we've got 100% certainty that inflation's definitely going to pull back into those bands, and we are still vulnerable to external shocks for geopolitics. So I think the sensible thing's probably higher for longer. A market pre-2007, I think the RBA would have gone another 50 basis points, but I think we sort of really dined out on those zero interest rates for such a long time. It's made central banks a little bit hesitant to push monetary policy where it probably was prior to those emergency rates. So I think it just prolongs the hold, which is not good for us in terms of trying to be interesting and talking about interest rates. But probably talking
about interest rates. It hasn't
bit of an oxymoron. Yeah,
It never ends, though. Okay, so another couple little things. Morgan's calling GYG a buy, saying it's looking, like its price target is $30.80, something like that. That's certainly captured the interest of the market. You at all?
Look, I think for the first 6 months, you've got a lack of free floats, so I don't think there's going to be any significant sellers in that stock. It's only about 15% comes on the market to be able to be sold by December, and then another 30% by June next year. So you're not going to see any heavy selling. It is a growth story, and if they get this store rollout right, and it is fairly early stage, it's not obviously not a mature business. Perhaps it is the anomaly. I certainly, things like Collins Food Group and Domino's for us probably too mature stage, and they've tried a lot of things, failed at a lot of things, but GYG, I think that novelty effect could see. Certainly in the next couple of earnings, there'll probably be some. The analysts will be a little bit forgiving, and as things come out of IPO. So. And their process is very good. Their app is working very well. A lot of it's delivery driven as well through the likes of Deliveroo, Uber Eats and things. So so I don't disagree. Whether I'd buy it up here myself at the moment or for our clients, probably not. But I wouldn't be surprised if if you go to IPO, you've probably got a pretty solid 3 to 6 month plan. That you can execute, so you don't disappoint shareholders. So I would back them to probably execute that plan over the next 3 to 6 months, and then from that point onwards, you've got a lot of cornerstone shareholders who can start to sell. The market might start to sharpen their pencils a little bit on the stock.
Just thinking about growth, though. So if you've got, would you say 5% in coal at any given time?
Yeah, at least 5%.
How much are you in growth companies? Where do you go for growth in your portfolio?
Growth in our portfolio at the moment, we've been probably a little bit overly defensive in the last 12 months. Admittedly, I didn't really see this sort of. I saw the higher interest rates probably coming home to roost a little bit sooner. But we kind of like the likes of some of the smaller companies, IPD Group, Mars Group, some of those smaller industrials. We're quite a decent fan of. Obviously, Liontown's another one that's coming into production this month, so in the mining sector there. And Ordinate's another one that we think will report very well. It's been hammered back from its highs around $23 around about the $16 mark, and it tends to beat expectations most times. And they've brought another range of products on as a part of their suite with the sporting AV stuff. So. Yeah, there's but a lot of the growth companies at the moment are trading at pretty high multiples. There's not a lot that can necessarily go wrong. So for clients who have the likes of WiseTech, Pro Medicus, etc., we tend to provide risk management plans, which is sort of more, I guess, from my trading days. Yep. Just to give them a really solid, a solid plan that they can follow, where they can, they can trim based on certain conditions. And it means that they're not, panicking and reacting on a certain down day, or a certain shock in the market. So you tend to make more rational decisions if you come from a place of being very organised and planning ahead.
Got it. Well, look, thanks for being organised enough to make it here to the studio. Again, thank you so much, Cheers. Mark, MPC Markets there. Now let's get across some of the corporate stories. In Booktopia, placed into voluntary administration, McGraw-Nicol appointed to handle the process. Shares will remain suspended. If you remember, that first happened back in mid-June. And it continued to be extended as the company really looked for funding. Clearly hasn't been successful. Bit of a sad story there. Lots to it, though. APA Group is flagging a non-cash impairment of $145 million in relation to its Sydney ethane pipeline. And Hillgrove Resources, a 22% increase in copper production from its Kenmentu copper mine in Adelaide. We always get questions from our audience about small copper exposure. And in fact, that's going to come up in the call, I do believe, in a couple of episodes. You can also listen to the call in podcast form, if podcasts are your thing, by the way. Rio Tinto is looking to invest a further $18.5 million to increase its shareholding in sovereign metals, just shy of the 20% mark. That operates in Malawi, and it's capable of supplying critical minerals. And you just heard Mark Gardner from MPC Markets there talking about Liontown Resources. It gave back some of yesterday's great gains, down by 6.5% today, saying that it's advancing that battery chemical refinery in partnership with South Korea's LG Energy. And the stock of the day was Liontown. We spoke with Ben Clark from TMS Capital and Michael Wayne from Medallion Financial. Take a listen.
Still got a lot of hurdles that they need to overcome on that production front, but if they can start to move into the production phase, then people will feel a lot more comfortable about it. It's just on the higher risk spectrum.
Okay, so no for now at least.
No for now.
I would look at this, like I had a quick read of that deal yesterday. It looks pretty good. You know, they've got a great partner. They've reduced their cost of funding. They've said that their main project's going to come on next month into production. They've got Gina sitting on the register with a 20% holding that she paid, I think, over $3 for or something. So you're not alone, Michael. We've got some MinRes as well. That's our main sort of, I guess, exposure to lithium. But I'd be a hold at this, and I even think this could be an interesting one to maybe look at buying. But I'll say a hold for now. I just want to see it settle down.
There you go. We'll get an update from Ben Clark from TMS Capital, no doubt, at some time soon. And that reminds me that the latest episode of the Investment Committee is online now. So go to the top of your ausbiz.com.au page, look under series, and you can click on the Investment Committee. Find out what the guys put in, what they took out. And we had a bit of a guest appearance from Mark Gardner from MPC Markets as well. Henry Jennings is on holidays. Let's take a look at some of the market leaders. Deep yellow, so on that uranium theme. Paladin Energy looking good. There's Stanmore that Mark Gardner holds for client portfolios, up by 5.4%. Boss in the uranium space, really dominated by uranium and coal here. Some of the laggards, though, let's see if there's a little bit more variety here. While Liontown giving back some of yesterday's gains. Monadelphous, I think, had a broker downgrade. GrainCorp trading ex-div. Strike Energy was bought into the end of the financial year, but it's been sold ever since. A little bit too much enthusiasm about its Arugula project out there, potentially. And Seek. I was speaking with David Lane from Ord Minnett just yesterday. They like Seek there. You might want to go back to the website and listen to that interview as well. He names tech companies that they've got buy ratings on at Ord Minnett. So a bit in the big end of town and a few smaller names as well, going by memory. Red Hill Resources up by 12.6% today. Satire up by 12%, but still, underwater after that big sell-off that came through last week. And American Rare Earths is up by 8.7%. In the small to mid-cap space, some of the laggers, Demerix, which was off by 12%, Tamboran, listed in the US now, down by 8%. And Tivian, that was on a discounted share placement, off by 7%. Overnight tonight in Europe, we get the PPI month on month, and we'll also hear yet again from ECB President Christine Lagarde. I was speaking to Nextaxis in the previous hour. They really do think that the ECB will stick with an interest rate cut this year, but probably later on. And in the US, we do get some data. ISM services coming through, PMI, unemployment claims, and the FOMC meeting minutes. We'll see what else we can parse from that. We did hear from Fed Chair Jerome Powell. His commentary about the data did excite markets through the overnight period. Now tomorrow here locally, we do have the goods trade balance, and in China we get inflation month on month, and US, it is Independence Day, the July 4th holiday. And looking further afield, we've got German factory orders tonight. But back to the here and now, shall we? Let me just get it up on my screen where the S&P ASX 200 finished as the last of the day's trades went through. That's the CIBO Australia Index on your page. So really saw some selling toward the close. The S&P is up by 0.25% still, taking the week's losses to 0.4%. Looking around the region, China's market's coming under pressure in the wake of that disappointing data, but elsewhere, looking pretty good. Japan's market has closed up by 1%. Looking ahead to E-minis at this stage, both coming under some pressure, mildly, and I know it's not a line to be drawn between how they're going right now and how the day will pan out. But also keep in mind that we've got the UK election on July 4th, tomorrow. So yeah, the UK election entering its final day of campaigning as we speak. That is it for today's edition of the COB. Remember, if you're listening to this in podcast form, we'd love it if you could just scroll down and give us a review. And also tell your friends about it. Tell your friends about us or it, whichever you prefer. Stay with us, more to come. And as well, we'll see you live at 9:45 tomorrow morning.